Hello everyone, welcome back to Moat. Today we'll be discussing Bubs Australia ASX BUB. In particular, we will be going through three main strategic decisions that management have made to see if they are good or bad decisions. Before we do that, it will be good to outline what Bubs actually does. So BUB Australia produces products, and they say that these products can be used to assist in the development of your baby in its first 1,000 days. Namely, their main Australian product is Australian goat milk. They source this from their local Australian goat farmers and have majority control over goat milk production in Australia. Second, they also dive into offering cow milk. Bubs state that they have created Australia's first organic 365-day grass-fed formula range. Third, they provide a range of different types of foods. So here we are talking about snacks, cereal, and pouches for kids. The fourth and final vertical is their vitamins and mineral supplements. This is a new vertical, in fact, and is one of the strategic decisions made by management and will be analysed later in the video. With this basic overview, let's now proceed to analyse decisions made by the Bubs management team. One of the key decisions that has been made by the Bubs team is that they have decided to manufacture Bubs China label goat infant formula in China, with its joint venture being with Mate. This Chinese labeled goat milk will use 100% Bubs Australian goat milk. There are clear advantages to this approach. However, there is quite a strong negative that might make this decision a bad choice. Let's first have a look at the advantages. It seems that this memorandum of understanding with Mate is the way that they can get state administration for market regulation brand slot. So that's SAMR approval. Bubs has previously tried this, however was not successful. This SAMR approval is critical for Bubs' ability to transact its products. The second advantage is that this created by Bubs strategy, but with a manufacturing of course in China, gives access to the larger Chinese market, with its infant formula market valued at $55 billion. Further, this relationship with Mate can give them potential access to their 30,000 mother and baby stores across China. As a third advantage, it should be noted that the intellectual property of BUB is still retained by Bubs despite this joint venture with Mate. While all of this does indeed sound good, there is a clear disadvantage of this decision, and it stems from the events that has occurred within China. There is a reason why a Daigou channel for infant milk exists and why you see demand for foreign-made infant milk. This is because of the multiple scandals that have occurred in China. Namely, the 2008 Chinese milk scandal was the main event to alter the Chinese psyche around infant milk. This scandal created hundreds of thousands of victims as well as tens of thousands of babies in hospital. Due to this, there is significant mistrust of Chinese milk. This is a huge issue, and I'm not sure if there is sufficient momentum at the moment in China to change the attitude. Also, it should be noted that Bubs is not a huge brand, and it's not a well-known brand. Hence, they cannot carry a predefined brand reputation, so to speak, and bring it to China. This makes it slightly more likely that this issue should be taken seriously, and this should be assessed as a backdrop to whether the Chinese manufacturing is a good decision or not. This leads us to the second strategic decision that Bubs Australia has made, which is an expansion into a new vertical, namely vitamins, through the product that they are selling, which is called Vita Bubs. They come both in chewable tablets as well as powder form. Again, let's have a look at the advantages of Vita Bubs. The positive of this new vertical is that they have an agreement with Chemist Warehouse, which will be putting Vita Bubs across its 400 stores. Chemist Warehouse is Australia's biggest pharmacy chain and Australia's largest vitamin retailer. The second positive is that Bubs, as a result, expects this to be a significant piece of domestic revenue, which is quite critical given their cash flow and profitability issues. Also, this will increase their target market since the vitamins is intended for children up to the age of 12. Hence, they are not limited to a younger customer base, which is traditional for infant formula milk, of course. They are also planning to release their product to an international market in 2020, namely in China, as well as Vietnam, Hong Kong, Singapore, and Malaysia. This is interesting since vitamins won't have the negative connotations associated with Chinese manufactured goods, as does milk as described previously. So if they ever do decide to manufacture in China, it won't be as big of a deal, for example. However, I'm not too sure how big the vitamin market is in these countries, and you should really have a look into that. If this product does, however, go well in these international markets, it could potentially have a network effect and increase the reputation of Bubs and Bubs Chinese infant milk. However, for the time being and how things currently stand, that is still quite a large stretch of an analysis. The primary disadvantage of this decision is that Bubs seems to be adopting a jack-of-all-trades approach, but master of none. They have not yet fully developed or achieved financial success within their core product offering. Yet they are developing an additional vertical with these vitamins. This is a questionable approach, and from my personal perspective, quite risky. The third and final decision that Bubs management has made is its hiring of Jennifer Hawkins as a global brand ambassador. This is a 3-year term covering all international markets. There's not much to say on this other than a few points, which is as follows. 1. Marketing as an expense is not entirely unexpected, and given that Bubs is currently within its growth stage, it is in fact rather encouraged. However, it should be noted that this will likely be a notable expense. 2. I see the benefit of hiring Jennifer Hawkins to play only well into the domestic Australian market. This could potentially be a nice bump in domestic sales, but probably more importantly, create general brand reputation. However, the third point is also quite notable, and it is this. I'm not too sure if Jennifer Hawkins as an ambassador will do well in international markets such as China. I doubt China consumers know who Jennifer Hawkins is, and for example, it may have been a better approach to hire a more Chinese-based influencer. But then again, if they do that, they could potentially run into the problem outlined earlier on, in that they do not necessarily want to be categorized as a Chinese product due to the 2008 Chinese milk scandal. So overall, it is quite a tricky decision. However, from my perspective, it seems that the value of Jennifer Hawkins won't be that much on an international stage, but only be for the Australian market, as well as developing the reputation of Bubs generally. So there will be, of course, some benefit in that sense. However, on the international scale, it won't be as much as I would have liked. These are the main decisions that Bubs has made recently, and there are evidently notable disadvantages, but also advantages if the identified issues can be surpassed. However, with the current price at 71 cents, the current market sentiment seems to be focusing on these disadvantages. It would be interesting to keep an eye on this and see how the Chinese manufacturing and Vita Bubs plays out. More certainty is certainly welcome.